Hey everyone, and welcome to another deep dive. We love to explore cutting-edge ideas, and the one we're diving into today is really fascinating. It's all about tokenized equity, and we're going to be unpacking some incredible insights from this article you sent over.
Yeah, it's a topic that's really at the intersection of finance and technology, and it's got the potential to really shake things up.
Absolutely. So before we get too deep into the weeds, let's make sure everyone's on the same page.
Yeah.
Can you give us that quick elevator pitch on tokenized equity? What is it? Why should our listeners care?
Well, imagine you want to own a piece of your favorite company, right? But instead of a regular stock certificate, your ownership is represented by a digital token on a blockchain.
Okay, so it's like a digital version of owning a share.
Yeah, that's the basic idea. But there's a lot more to it. It's not just about slapping a label on any token.
Yeah.
True tokenized equity has to be backed by real ownership.
Right.
That means clear links to regulatory filings and stuff, like knowing who issued the token, seeing that transparent blockchain metadata, and ideally having third-party custody to make sure everything is legit.
So there's got to be substance behind the token, not just hype. Now, how does this differ from just buying stocks the old-fashioned way?
Well, one of the biggest things is accessibility. Tokenized equity could make it easier for folks to invest, even if they don't have a ton of money to throw around.
You mean like people who can't afford to buy whole shares?
Exactly. It opens things up for smaller investors. And then there's the potential for more liquidity. It could be easier and faster to buy and sell tokenized equity, even for companies that aren't publicly listed.
That's a big deal, especially for those who want to be able to quickly get in or out of an investment.
Right. And of course, we can't forget the whole transparency and security thing that comes with blockchain.
Yeah.
It's all recorded immutably, which reduces the risk of fraud and all that.
Yeah, that's got to be a big draw for a lot of people, especially in today's world. Now, the article mentions that the tokenized assets market is projected to reach something like $10.9 trillion by 2030.
Yeah, that's right. I mean, that's a massive number. It really shows you the kind of impact this technology could have.
It's pretty mind-blowing. But let's shift gears a bit. How does a company actually go about tokenizing its equity? What are the steps involved?
Well, first things first, you got to understand how blockchain technology and tokenization actually work. You can think of blockchain as like a super secure digital ledger that keeps track of every transaction.
Okay. And then there's the whole thing about choosing a blockchain platform for your token. The article mentions Ethereum, Polkadot, Tezos, Solana, a whole bunch. How do you decide which one's right for you?
That's where it gets a bit technical. But basically, each platform has its pros and cons. Things like transaction fees, speed, scalability, security all come into play. It's like choosing the right tool for the job.
Makes sense. So what happens once you've picked your platform?
Then you've got to navigate the whole legal and regulatory maze. And this is where it can get tricky. Securities laws, KYC/AML, compliance, tax implications. You really need to have legal experts involved to make sure you're doing everything by the book.
Yeah, that sounds like a crucial step. Wouldn't want to run into any trouble down the line.
Exactly. And then once you've got the legal stuff sorted out, you need to actually develop the token itself. That's where smart contracts come in.
Smart contracts, I've heard the term, but to be honest, I'm not really sure what they are.
Think of them like self-executing agreements written in code. So they automatically enforce the rules that are laid out in the contract. Like for tokenized equity, a smart contract would define who owns the tokens, how many there are, what rights the token holders have.
Yeah.
That kind of stuff.
So it's like a digital agreement that cuts out the middleman and makes sure everyone plays by the rules.
Yeah, that's a good way to put it. But developing those smart contracts, it requires real expertise. Got to make sure they're secure and work the way they're supposed to.
Okay, so you've got the token developed. What's the next step?
Well, you need a place to store those tokens. Right. That's where digital wallets come in. There are different types. Some are managed by a third party. Some are non-custodial, which means you hold the keys yourself. More control, but also more responsibility.
So it's like choosing between keeping your money in a bank or hiding it under your mattress.
Kind of. And then there are these things called multi-signature wallets, where you need multiple people to approve a transaction. Adds an extra layer of security.
That sounds like a good idea, especially when you're dealing with something as valuable as equity.
Definitely. And then once you've got the tokens created and stored securely, you need a way for people to buy and sell them. That's where setting up a secondary market comes in. It provides liquidity for the tokenized equity.
Yeah.
So people can trade it easily.
So it's like creating a stock market specifically for your tokenized shares.
Yeah, kinda. There are different ways to do it.
Yeah.
You can create your own exchange partner with an existing one, or list on a specialized platform.
Got it. So it sounds like a lot of thought and planning goes into this whole process.
It definitely does. And even after all that, the work's not done.
Yeah.
You need to keep an eye on things. Make sure the smart contract is working properly. Maintain transparency. Keep investors informed. It's an ongoing process.
So building trust and transparency is key.
Absolutely. Now, we've talked about what tokenized equity is and how to create it. But what about the benefits? Why should people care? Well, that's where things get really exciting. Tokenized equity could open up a whole new world of possibilities.
Yeah.
For businesses that need funding and for everyday people looking to invest.
Okay. Lay it on me. What are these amazing benefits?
Well, we touched on liquidity before, but it's worth repeating. Traditional equity, especially in private companies, could be tough to sell. It's like owning a rare book.
Yeah.
Might be valuable, but good luck finding a buyer.
But tokenized equity could change that.
Exactly. By making it easier to buy and sell, it could attract a whole new wave of investors, people who want more flexibility.
So it's like taking that rare book and turning it into something you can trade instantly online.
Yeah, that's the idea. And then there's fractional ownership. Remember how we were talking about smaller investors? Well, this is where tokenized equity really shines. You can divide ownership into smaller pieces represented by tokens. So even if you don't have a lot of money, you can still get in on the action.
That makes a lot of sense. I remember when I tried to invest in a friend's startup a few years ago, the minimum investment was way too high for me. But if they had used tokenized equity, I could have been a part of it.
Exactly. It levels the playing field. And because blockchain is global, it opens up investment to people all over the world.
So no more borders. That's pretty amazing. What else?
Well, of course, there's the transparency and security that comes with blockchain. Everything is recorded on this immutable ledger. It builds trust.
Yeah, that's a big deal these days. Okay, so we've talked about the theory, but are there companies actually using this stuff? Like in the real world?
Oh, yeah, definitely. The article mentions some really interesting examples, like UBS Asset Management. They launched a tokenized investment fund in 2024. So even the big institutions are getting involved.
That's pretty impressive. What other examples were there?
Well, there's this company called Bakkt. They're letting people outside the U.S. invest in tokenized versions of U.S. stocks. Like Microsoft, Tesla, Google, that kind of thing.
So it's like opening up the U.S. stock market to the rest of the world.
Exactly. And the market is growing rapidly. The market value of tokenized assets was at like $186 billion in November of 2024. That's a 32% increase from the beginning of the year.
Those are some serious numbers. But it also makes you wonder, is this sustainable? Or is it just another bubble waiting to burst?
That's a great question. And it's one that every investor needs to consider. Tokenized equity has a lot of potential, but there are risks too.
So what are some of the potential downsides? What do investors need to watch out for?
Well, one of the biggest concerns is regulation. The rules around tokenized equity are still evolving. What's allowed in one country might not be allowed in another. It's a complicated landscape.
So it's a bit of a Wild West right now.
Yeah, you could say that.
Yeah.
And then there's always the risk of technology issues. Blockchain is generally secure, but we've seen hacks and bugs before. Those can lead to big losses.
So even with the best technology, there's still some risk involved.
Of course. And even if the tech works perfectly, there's always human error, like losing your private keys. If that happens, you could lose access to your tokenized assets forever.
Ouch. That's a good reminder to be careful with your digital keys.
Yeah, definitely. And then there's the liquidity issue. Even though tokenized equity is supposed to be more liquid, it's still a relatively new market. So trading volumes might be low, which means it could be hard to buy or sell your tokens when you want to.
So liquidity is still a bit of a question mark.
It is. And we can't forget about volatility. The value of your tokenized equity can go up and down, just like any other cryptocurrency.
So buckle up. It could be a bumpy ride.
That's for sure. And remember, the value of your tokenized equity is tied to the company. If the company does well, your tokens will likely go up. But if the company tanks, well, you get the picture.
So you really got to do your research.
Right.
Just like with any other investment.
Absolutely. And there are custody issues to think about.
Yeah.
Unlike traditional stocks, you might be responsible for holding your own tokens. So you need to make sure they're safe and secure.
So there's a lot more responsibility on the investor.
Yeah. You could say that tokenized equity is a powerful tool, but it's important to understand the risks as well as the rewards. It's not a magic bullet.
So where does that leave us? What's the big takeaway for our listeners today? So it sounds like tokenized equity is still kind of a new frontier.
Yeah.
Lots of potential, but also some risks to be aware of.
Yeah, I think that's a good way to look at it. It's kind of like the early days of the internet.
Yeah.
There was so much excitement and potential.
Yeah.
But also a lot of uncertainty.
I see what you mean. So do you think this could eventually become like the standard way companies raise money and manage ownership?
It's definitely possible. The technology is still developing, and there are some hurdles to overcome, but things are moving fast. We're seeing more and more companies exploring this, and as the regulations become clearer, I think we'll see even more adoption.
You mentioned regulations. What role do you think they'll play in the future of tokenized equity?
Well, I think we're going to see more standardized rules and regulations. That'll provide some much-needed clarity for both businesses and investors.
Makes sense. So what can everyday investors do to stay informed and make smart decisions in this space?
Well, education is key. Take the time to really learn about this stuff. Blockchain technology, tokenization. What are the risks? What are the opportunities? There are some great resources out there, online courses, articles, even just following the news.
And don't forget about the power of community. Connecting with other people who are interested in this stuff, sharing ideas and experiences.
Yeah, definitely. The more you learn and the more you connect with others, the better equipped you'll be to make informed decisions.
This has been a really insightful conversation. I've learned a lot. Any final thoughts you want to leave our listeners with?
Well, I think the thing that excites me most about tokenized equity is the potential to democratize investment. To give everyone a chance to participate in the growth of innovative companies. It's about empowering individuals.
That's a really powerful idea. Thank you so much for joining us today for this deep dive into the world of tokenized equity. It's been a pleasure.
The pleasure was all mine. And remember, this is just the beginning. Most exciting chapters are still to come.
That's right. And maybe our listeners will be the ones writing those chapters. Thanks for tuning in, everyone. We'll see you next time for another deep dive.